Here's the U.S. market summary for Tuesday, August 19th, 2025. The U.S. stock market presented a divergent picture today, telling a tale of two distinct markets. While the tech-heavy Nasdaq Composite experienced a significant decline of 1.5%, and the broader S&P 500 fell by 0.59%, Dow Jones managed to close in positive territory. This split performance indicates that today's selling pressure was not a broad market panic, but rather a targeted and rotational sell-off concentrated in the technology sector. The core thesis for today's market decline centers on three key factors. The primary driver was a sharp correction in high-valuation technology and artificial intelligence stocks, as investors began to take profits after a very strong and prolonged rally. This pullback was ignited by a specific catalyst, a negative report from a short seller targeting the AI firm Palantir, which created broader anxiety about stretched valuations across the entire sector. Compounding this was a general wait-and-see approach from investors, who are cautiously positioning ahead of major announcements from the Federal Reserve later this week. A deeper look at sector performance provides clear evidence of this capital rotation. The chart illustrates a definitive shift away from high-growth sectors and into more defensive, value-oriented areas of the market. Information technology was the worst-performing sector, falling 1.98%. In contrast, interest rate-sensitive sectors like real estate and utilities were the day's biggest winners. This dynamic suggests that investors are de-risking from overvalued tech while simultaneously positioning their portfolios to benefit from potential future interest rate cuts by the Federal Reserve. Amid the tech sector turmoil, the earnings report from Home Depot provided a crucial, stabilizing counter-narrative. Despite narrowly missing analyst estimates on both revenue and earnings per share, the company's stock rallied over 3%. The market's positive reaction was driven by one key detail. Home Depot's management reaffirmed its full-year financial guidance. This signaled strong confidence in their operational control and in the underlying resilience of the American consumer, providing a fundamental pillar of support for the broader market. The market's largest and most influential technology companies were at the epicenter of today's sell-off. This table shows broad-based declines across the board. The pressure was most acute among semiconductor and AI-related stocks, which have been the market's top performers this year. Palantir was the worst performer, falling over 9%, while key chipmakers like NVIDIA and Broadcom both declined by 3.5%, reflecting the sector-wide profit-taking. Beyond the mega-cap names, performance was driven by company-specific news, creating starkly divergent outcomes even within the same industry. The semiconductor space offered the clearest example of this. While the broader sector was weak, Intel shares surged 7% to become the top gainer, driven by news of a major investment from SoftBank. In contrast, its primary competitor, AMD, was caught in the downdraft and fell more than 5%. This shows a market that is carefully differentiating between individual company stories. Investor focus has now pivoted entirely to the macroeconomic horizon, with all eyes on the Federal Reserve. The market is in a holding pattern ahead of two critical events that will dictate near-term direction. First, on Wednesday, the Federal Open Market Committee will release the detailed minutes from its July policy meeting. Then, on Friday, Fed Chair Jerome Powell will deliver a keynote speech at the Jackson Hole Economic Symposium. Investors will be scrutinizing both events for any signals regarding a potential interest rate cut in September. Looking ahead, Wednesday is poised to be a tale of two halves, driven by two conflicting narratives. The morning session will be focused on corporate earnings, with a key report from the retailer Target providing the next major data point on consumer health. The afternoon session, however, will be dominated by the Federal Reserve, with the release of the FOMC minutes at 2 p.m. Eastern. A weak report from Target could increase calls for a rate cut, but hawkish minutes from the Fed could dash those hopes, creating the potential for significant market volatility. In summary, there are three key takeaways from today's market. First, This was a targeted correction in overvalued technology stocks, not a broad market collapse, as value-oriented sectors showed significant resilience. Second, the market is now in a holding pattern, with the Federal Reserve's upcoming announcements being the most critical near-term catalyst. And finally, the American consumer appears to be cautious but resilient, providing a solid foundation of support for the U.S. economy.